At this moment, welcome to 533 edition of Invest Data Trading Academy live with Ambrose. Yes, I'll tell you that there is a breakout across the globe. It's the last trading week for the month of July, the first month of the third quarter of the year. And I'll tell you that across the globe, market has kind of rebounded. Why I mean rebounded? The positive news of US and EU kind of entering an agreement or signing a deal of this trade union of this trade tariff, sorry, at the rate of 15%. This has changed the dynamics of the market, even when China and US are still kind of deciding on what to do, even when they're trying to even have a expanded period to discuss. But one thing is telling us that if most of the economy, most of the trade partner of US are almost agreeing, I mean that the fear of trade war has kind of a bit kind of subside, because before now trade war has been the target that will trigger, and also that was also kind of distort the global flow, global trade. Sorry, these are the things that we are seeing now with this latest signing that they had over the weekend. You saw that US market also some of the index are hitting a new high. Now, even as more earnings are coming in those matured market, we are seeing it as a plus for the market with this all this sentiment or news that is coming, boosting also market sentiment as we speak. But I believe that once China and US are able to also to sign the agreement, I'll tell you this tariff thing will gradually also slow down. But what is that most of these domain or different countries are looking at, not that tomorrow another tariff will come, they're going front and back. I think they are trying to understand and sign a good deal that will favor their own country, and also US also being light. These are the light. These are the things we are believing that is going on. But I know that don't forget that the two giants in the waters of economic and trade are this China and US, and two of them are still they are the ones that is left. And I believe that the way they've signed with others, starting from UK, still EU now as a zone. Also, we've seen Indonesia, others, India, all of them are coming on board. But I believe that with time, this trade war, but gradually as the year is winding down, because already in the third quarter, and also like I said, this is the last trading week for the first month in the third quarter, which is the month of July. We're crossing to August, and don't forget that from September, all eyes will be on Q3 project for the end of the year. And I believe that most African countries are taking advantage of what is happening today, across the globe to reposition their economy. We're seeing improving data in South Africa. We're seeing the earnings looking good, as companies are really results. These are the things that will help the market between now and end of the quarter. For we're going to see sector rotation, going to see possible a shuffling, going to see a lot of people selling or taking profit, and that's why we are seeing improved activities. It's not in Nigeria, it's across the globe that we're experiencing any season, and that's why I see most markets are looking up in green, whilst some are still oscillating. But let's continue and see what is happening, in Asia market. That is a place of where starting right now. We can see that in Asia market, the market there is struggling for what? For direction. As the week have started, as this busy week have started, in the midst of what, expecting a back of Japan, great decision coming up this week also. Why Hong Kong is also is leading kind of the regional gain as we speak now, with transmission of the outcome of US and the EU trade deal. This, like I mentioned earlier, this also have triggered a lot of cheer, kind of happiness or hope, like let's say, kind of hope forward for the global economy and also the market as we speak. Knowing that, yes, like you say that by investors looking at what's going to happen. Also, there is some question to see, the deal, how it's going to be implemented on the 1st of August, even when China and the US are trying to extend their own discussion, because the decision they enter in May is that by the August 12th, we're looking at all this. August is ahead of the 1st of August. Let's look at it how it's going to play out. As we speak now, I say that Monday gain across this market in Asia are also extending what they saw, or what kind of trading or kind of tracking what happened, in US market. That is Wall Street on over the weekend, and also for the week strongly finishing strong, in US as a S&P and the Nasdaq to close on a new record highs, in that market. These are what's also happening in Asia. Now, Asia stocks are also, like I said, this trading hour, we're seeing that globally investors await Fed decision, starting on Tuesday, and also more corporate earnings are coming. These are the things that are shaping sentiment in the market, with all eyes on the world, on the big giants in the tech companies, especially looking at Apple and also and the Microsoft to release their earnings this week over there in the mature economy. Like I said, as all eyes are still on China and US trade talk ahead, I tell you, more investors and traders are digesting the outcome of the deals signed by what EU and US as we speak, and this also giving a framework of how it's going to work. All the tariff here and the agreement signed, people are digesting it, and that you are seeing the market in Europe also as we speak now is also looking in green. Just also in US also looking up. You can see that even as we expect to see a lot of macroeconomic data, earnings to come in this week as the month is running up, the month of July is running up. Want to see more earnings. These are going to put more, if they are positive as we have seen so far, it's going to put more sentiment and pressure on the market. That is why you need to pay attention on this. Very, very important as a trader or investor. Pay attention to all this because these are how you look at what is happening in your domain and also how all activities are going to influence decision making and also flow of fund in that market is very, very important. But as well as the China market has opened higher, but we expect that some gains in the trade this morning are slightly in that, even though it's closing in the green, it's open in the green. But I believe that most of the indices are also missed. Some are in green, also are ticking down already because of this postponed what or kind of a prolonged dialing on this trade by China and US. But if you look at Hong Kong index is higher this morning. We're seeing that Hong Kong index is trading at almost 0.5. It's higher after over 1% in the early trade. We're seeing this also South Korea. We're seeing also reach there. The indices there is unchanged, very flat at this hour. But I tell you, heavyweight stocks, especially from tech company, are also kind of influencing the positive market there. We're seeing that as stock eyes are still, to see these numbers, I believe that that will give a clear direction also in that market. Don't forget that India also at this hour, I see that 50 is also lower at this while Philippines was seeing a jump of 1.3% in their composite index as we speak now. And that of Japan is down by 1.1% after 1 year high last week. No, I'm not surprised because we expect that profit taking will be part of it. That's what we are seeing. Also, as Japan banks, the Central Bank of Japan or Bank of Japan is set to keep rate, at 0.5 when it meets on Thursday, sorry, this week. These are the things that also likely to. But I believe that with Japan and the US signing their trade deal, that will be a plus for them. That will not put more pressure again. Consider let's what the Central Bank is going to do at the end of the day to offer. This also might also look like let's see how it goes because now they've agreed on trade deal. Let's see what kind of going to the future, the later part of this year, if the rate hike will continue as we are seeing, they are likely to keep it at 0.5%, in the next coming meeting on Thursday. But there is a big, picture of what is happening in Japan. Also review some uncertainties, some factors, some factors, uncertainties, some factors, and also where it can be removed. And this also will guide investors in making their investment decision. Like I said earlier, that was that in Europe, most of the stocks there are in green. I tell you that the sign is also reflecting, in that environment right now, and that is a plus for Europe as we speak. But I believe that investors are still analyzing the outcome of this meeting. But like I said, this is a busy week for most of the market because we're going to see more earnings in the market. And you don't forget that Germany being the largest economy in that eurozone. I believe that as we're seeing, expect to see more positive number from that zone. That's also going to reflect activities in that market. But quickly look at the big US market. That is one according to the deal now where all eyes are to speak. Let's quickly look at what is happening in US. Look at US market. I'll tell you that stocks are taking up, or I mean the indices there are all in the green as we speak. After the US European the agreement to push out which is also to avert the potential damage of damaging the trade war. These are the things that will secure the danger of trade war. These are the things that this agreement or this deal has also averted. For me, it's a good one. Attention now is turning toward between US and China and as they plan to meet in Sweden very soon. We want to hear more from their discussion where they are going. Once they go to lock their own deal there, that will also be a good one. Like I said earlier, all the futures in US or their indices are in green at this hour. Investors are digesting the key development and also ahead of what they will for major earnings, macroeconomic data, and central bank decision this week. These are the major things. Like I said, this is a busy week for most of the matured market. And don't forget that last week we saw that in our own market where we saw the economic data hitting, we saw the NPC meeting here in Nigeria, and also more earnings this morning. But that earnings are started also kind of hitting the market in increased rate compared to what we saw last week. This morning alone, more than 8 companies have released their on their half year result, and we're seeing companies that are not into trading dividend also continue what we saw in Q1. I see the life of Unilever. When I come to Nigeria market, we'll do that. But as I speak now, US market is also in green. Like I said earlier, Dow Jones is up by 0.3 as we speak now, and also while S&P is up by 0.4 and Nasdaq is up by 0.5. These benchmarks are telling that yes, we're seeing activities, position taking heavy tech companies. Like I said, as all eyes are still on their numbers to hit the market. Between now, I believe that the market is extending what it did on Friday. That stronger run on US market is also good one because of a positive of what called upbeat quarterly results that have hit the market so far that have kept that market in this direction, as well as also expecting of more better numbers to come, and also this study where plans for US and also supporting equity also, why as many countries are already signing agreement to avert war, trade war, and that will be good for the global economy as we speak. That is also a point that most markets are looking and most traders are looking. But I believe that once the US and China also come agreement, that will also temporarily push the market up again until all earnings. And don't forget that earnings are coming. Institutional investors are still digesting both the market market and also that here. As forecasts are still on more the economic data and more numbers to hit the market over there in US and other mature markets. Here you can see that gold is holding strong this morning. We see also cryptocurrency like Bitcoin almost hitting 120 again around the 119 and 500 there, 119,500 there, dollar as we speak right now. For me, it's a good one. But you can see that people are looking at alternative. But I tell you that this trade war that is gradually coming down because of what? Because of we're seeing the deals that have been signed to avert this the damage trade war will do to global economy and prices. That is a good news, and also it's also risk sentiment. It's also kind of reducing on this regard. Come back to African market. I say that African market has recently sustained a very positive momentum, which this morning we're seeing most of the market in this Sahara Africa extending that positive momentum, which also for me is a good one as we speak. Now, if you look at what's happening in South Africa market, Ghana, Kenya, I see that it's a mixed market, but most of them are in green. Back to Nigeria, I see that the Nigeria market, which is NGX, is also extending the positive trend that have started for the past 18 trading session, and that is a good news for me. This is the longest rally I can see where you have not seen a pullback for a straight 18 days. That's almost getting to a month now. So if some trading days for some months are within 17, 18 days, 22 days. Already we're seeing a market that have rallied for straight 18 days as we speak right now. Says that there's something working for our market as we speak. Looking at market data right now, I see that NGX has extended the positive sentiment we saw at the last trading day of the week. As we speak now, the market is reading 134,859.02. That is representing 0.3%. If you look at the terms of a basic point, 405.12% in a grade. For me, this is a good one for the market. The market is always hitting 135. Sorry, market has even crossed 131 and move up. For me, it's a good one right now. If you look at this point, you can see the market has also really can see here 135,015. You can see that this market is also galloping right now as we speak. But if you look at the market breadth is very, very strong. We're seeing buyers dominating sellers at this hour, which is a good news. We're seeing 35 stocks at the gainers chart and just 18 on the loser chart right away. For me, it's a plus for our market, and there's a trend that has been sustained all this while to show that yes, the investor confidence at this point is also waxing strong. But what will you be doing as a trader or investor at this point? And that is why our topic this morning for this class will tell you that yes, we are looking at what is happening in this market. How can you navigate? Say navigating any season amidst NGX overbought risk and opportunities. How will you navigate this market? We are seeing earnings are coming. What will we be doing to stay ahead of the market. For me, I say that NGS is at a crossroad, at a crossroad at this point. As earnings release so far, they view pockets of opportunities or potentials of uptrend, showing that the market is resilient at this point in the midst of improving macroeconomic data, and also that indicates that the market is headed somewhere. More fun is what we're going to look at now. That's why, as we're going to look at the chart now, we want to look at what is the fund telling us, the indicator that should have funds ahead in the market. Is this still up? Is this still at that level of 100? That remained for most of the past three trading sessions last week. That's why, as we're seeing improved macroeconomic data, how we're going to play the market this time is very, very important. It is time for market players to really understand the importance of technical analysis and shift in macroeconomic drivers at this moment, because that is the only way we can navigate against risk and also take advantage of what the prevailing opportunity that the market is providing at this stage. Why I say so, market is at the critical point. This is overbought market. We are seeing strong momentum, company the overbought. How is it time for you to start taking profit? You will know. Or what are you going to do with the numbers that are hitting the market now? Most of the numbers we have seen so far beat market expectation. Look at the number that came, especially from the, let me use the word manufacturing sector now, because I see that some are from from the consumer goods, some are from the industrial goods. Most of them are cement manufacturing companies. You can see that those numbers beat expectation. Even this month, I start seeing some service sector results. The one that came from UCAP so far, the one that came from even Africa Prudential. These are good numbers that say that we're seeing companies sustaining the momentum we saw in 2024. For UCAP to be announcing a dividend, it's because the numbers are strong. For Africa Prudential to be announcing also takeable, then you can see the life of Unilever numbers, that of Vitafoam. You can see these numbers are not looking bad at all. It tells you that the market is under, and so the number that came from the power sector as we speak. This power sector right now as we speak, the power sector shows that there's a lot of opportunity in that. People know because I see the number that came from from number that came from Geregu flour, and now transport power shows that there's a lot of potential in these companies. You must buy into them as a trader if you want to reposition. But what you must consider what to buy right now or not. Because these are the 10 investors need to do as to speak now. But you must pay attention to this number to tell you what to. That's why as we go through this class, we know. One, looking at the macroeconomic background right now, say that interest rate and the inflation and exchange rate is a key factor to consider to know where the state of our economy now. We are seeing improved number going to be sustained. Yes, the exchange rate is very, very important. Interest rate is very important, and also the and the inflation. Where are they on inflation? Seems to be what kind of kind of slowing down, or can say this inflation and that one is trying to slow down. Is it going to continue? If you continue, are we going to see rate cut or exchange rate being sustained? These are the things that I just say you need to pay attention to this macroeconomic background to see how it's going to work out into the future. Look at corporate and the corporate and the economic numbers that are hit so far in the market. These numbers are not bad at all. We are seeing corporate numbers so far telling us that yes, actually we can see that from the numbers so far, we're going to see positive GDP. That means in the replaced GDP, we have seen that slow down from the what we saw in 2024 last quarter. With the numbers we are seeing so far, if it's sustained throughout this earnings season, I'm going to tell that we're going to see another better Q2 number against all the Q1 that is about 3.13. That is that these are things. What are the factors? What are the industry or sectors that are driving our GDP? It's very, very key. Before now, I see that service sector have dominated in terms of contribute to GDP. Now that we're seeing improvement in the manufacturing sector, and that means the economy is going to focus into production. If the interest rates continue to look down and now have access to cheaper funds that will drive production target, and also we're seeing government trying to make sure that the exchange rate remains stable. These are the things that will drive. So I feel that we should pay attention to all this because it's very, very important. Actually, that's why as we're seeing positive economic numbers and corporate numbers, say that it's better than telling us what is ahead of the market. Another thing I want to point out is that NGS technical position is very, very important, or take away from the technical view, which also we are going to see here. You can see the pattern we are seeing. These are the extension of what of an a markup phase. It's continuing to go up as we speak. Yes, market hitting 150 even before end of Q3. It's very possible as we are seeing these numbers as at the end of the day, the major players in the market, the institutional investor, also foreign investors are coming back to our market now. Looking at this number and in that position in some companies, some stocks that are good fundamental are still going to go up because on the strength of the number they are posting. you can see that the pricing is going across our market right away because company performance has also supported the pricing we are seeing. That is that as a trader, you must pay attention to tech analysis. Even when the market is feeling overbought, quickly I want to call up some indicators that will tell us the state of the market so that it helps us to analyze this state because we are saying market at overbought. Then what are the opportunities in this? The high risk at this point. How can we take the high risk at this point? Where's the opportunity in this setting? Is it time for it to start playing safe? What is the next thing we need to do? It's very, very important at this point. Let me call the RSI is very, very important because we are looking at overbought region. You need to also have your RSI to help you. Even when money flow is already pointing to that, also need it. But let me quickly also call my MACD. Even when the money flow and RSI have also momentum indicator, but MACD is very, very good also to let you know the state of things also at the end of the day. I don't want to crowd this chart, but let's take this for today before we can start removing them. If you look at the market right away now, market is also on the up direction. And what are you going to do? You can see that market is extending a mark of it after this kind of accumulation at this point, or call it consolidation at this point. You saw a markup that's extending, and this markup has shown that the market is at overbought region. You can see it here, and money flow is at the peak now, 100. That's why it's not going anywhere again. But don't forget, if you look at this point, the market at the peak here, 100 can also come back and see this other point again. But the market also at the same 100 also. But after that, you see what there was a correction. But now, I was seeing that different fundamental at this point. The market was at 100, but it didn't stay too much. You can see it here. But now you can see that it's longer. We have seen the market at 100 points in terms of money flow. But this was just a very short time. But now, because the fundamental of the market was seeing a shift, of the macroeconomic data, the company's earnings, that have kept the market up, even when the indicators are reading overbought as we speak. These are things that you must look away. These are technical you should take away from here. But with this, what will be the next, decision you should be doing as a trader investor in this market? Yes, I feel that the time for sector rotation also rebalancing at this point. And when there is sector rotation, it means that we are going to rotate from what going to be between the service sector and the manufacturing sector. That is going to be a sector rotation right now because we have seen that most of the service sectors are putting are also rallying, and also the result that for manufacturing sector also rallying. Look at the potential, the upside potential of the service sector and the manufacturing sector. Which one are you going to see? It is that that's what it will guide you to the kind of position of for the terms of sector rotation right now in the market. It's very, very important. Another one question I want to look at in this rotation, you're going to use your technicals to know which of this sector that is also overbought and oversold. You need to know. And not that most of these, both their sectoral indices, they are all at overbought region. And I say that yes, even with the consumer goods that's almost 50 to 60, even more than 60 now, I'll tell you that you need to also play with caution, but it's time to look at where are they going. And that is why combining your multiple time frame here is very, very important. That means you look at the market, looking at your short-term time frame, your long-term and medium time frame, looking at the market to see where the stock is headed to know the highest price these stocks are gone, and also where are they now. With the numbers we are seeing, will they surpass their last resistance level or the peak you've gotten in the history of the market on the last 5 years or the last 6 years? You must pay attention to all this because it's very, very important, especially as the dynamics of the market change in terms of fundamental, in terms of liquidity. But even at this point that we're seeing potential of risk and also potential opportunity, you must balance it to know where you continue because this is the time for most of the design investor or trader as you are playing the market to target some defensive sector or defensive stocks that you know that yes, even when the market tries to adjust tomorrow, you are safe in the market. These are the another one that as NGX has remained resilient in Q2 throughout now in first quarter, in the first month of the third quarter, we are seeing that market has sustained that trend. I will tell you that market has been so impressive. I will tell you that this impresses that as investor, you must pay attention, like I said earlier, pay attention to your technical, about the condition of the market and also the macroeconomic risk that call for caution at this point. As you're looking at the technical report, looking at the macroeconomic risk or shift, that means at this point you need to trade with caution no matter who you are. Even though you are trading, you are investing, you watch very careful and know gradually where you should be looking at. This is the time to focus on what I call value and strong fundamentals and also quality sectors. That any deep opportunity is for a buy, but it must be in a line of what you are buying into defensive stocks or defensive sector that at the same time also will help you to manage your portfolio. Because I tell you, the state of corporate earnings we have seen so far, but what I'm expecting, if continues strong and healthy, that's going to drive the direction of the market. But let that guide you to stay ahead of the market or for your next move. Once you have the back of your mind, I'll tell you, you are in for the world, for the gain of this market, even at this stage of overbought. But you need to treat with caution. It's very, very important, as I mentioned earlier, because market cannot remain up or remain down. Already we have seen that market has been up. If you check from this, from this breakout here, this as late April, you start seeing this market. You can see it has been above the T line, and then that this that strong momentum remain in the market, even when there's a little profit taking. But you can see recently for the straight 18 this market remain up. Even when it break out here around that late April, that it come to the T line, it went up. So it never break down the T line. It touched it down. It based on that these stocks or the market has what strong momentum that also that actually don't forget I said that even the market is going up, that 50% of market direction direction is what the general market is doing. The general market is looking up, whether now it is the high cap stock, the medium look up as far as the general market is going up, that both the medium and don't push it index going to drag some industries, some sectors, some individual stocks up. And that's why the most trade focusing on what where index is going. But at times it's good to also go to your sectoral indices an individual chart to give you more information. With this earnings, don't forget that earnings is where you see more volume, you see more sellers, you see more buyers trying to balance their portfolio. But the good thing is that if you look at the market today now, the volume is far, far below what you have seen so far. And you can see that even at the market, that's why we're seeing kind of a divergence between market rally and volume. That volume has been the market rally before now, but recently in the last 5 to 6 trading days, volume in the market has been below average traded volume. That also has been a concern. Like I said, you have to take with caution. It's very, very important as a trader or investor. Yes, because of our time, quickly look at money flow, what is trading. Look at your RSI. RSI is at overbought region. You can see that even it has surpassed here. You can see where it is now. It's above, almost getting to 195. And don't forget that RSI has two way of again. If you're using 80, 2080, once it's above 80, so you are using 3070 also. But now at this overbought region, we are seeing strong momentum. But one thing I tell you that even as we are seeing divergence in volume, as well, we also see divergence in our histogram. So it's coming down where the market is going up, volume is coming down. That's why I said you need to trade with caution. It's very, very important. But good thing is that as we are seeing positive earnings, funds are in the market, you need to watch, but know when to take your profit and also to bring your portfolio towards defensive sectors and defensive stocks that will help you to manage any correction or pullback. But I tell you, any pullback with this earnings running strong, we are seeing 409 is opportunity to buy into what into value strong companies and also defensive sector or defensive individual stocks that will help you to manage your portfolio. On this note, I would say thank you. But before we do that, let's look at the top gainers right now. As if we can check two. Let me say, we have just 2 minutes left for this class. Let's look at that 2 minutes to look at the top gainers quickly. That gives us an insight again. Let's look at the top gainers and see what they are doing and their chart to see if we can also look at it. But mostly we are seeing that the most of the stocks that are leading the top gainers are more of a medium and low cap stock. But let's look at the champion period. But look at it. Let's look at the chart. I didn't say you buy, but look at the chart for you to see what is there. Look at the champion period. Let's look at how the stock is doing. It's nice to look at it. Let's see how the stock is doing now. Champion period. See how the stock is doing. Yes, you can see on the daily chart, you can see that it's trying to come up around there. I thought almost starting, but you can see where it is now. You can see both fund is putting the stock. But look at 1 hour chart for the stock. You can see, look at 1 hour stock for the stock. What is the 1 hour? Look at it. Yes. Look at it. Where what is going? Yes. Also, look at what is happening. Also, in Ella Lake is among the top users. Let's look at it. You can see that Ella Lake is going southward as we speak now, and the life of livestock is not that came also is also pushing that one. We need to pay attention to all these ones to see why the results were Hawkeyes are still on the top. We can see that Ella Lake, you can see that it's trading below the T line. Money flow is looking down. I can see that also RSI is also looking now. But for me, RSI is looking to almost a overbought region for the stock. You can see oversold region that one can start looking to see whether it will rebound. We can still go in that as MACD has confirmed a bearish state on 1 hour chart for the stock. But that is for LNA. Then let's quickly look at what is happening in the life of Access Bank for you to call it today because our time is fast spent. Even I'm gone ahead of the time. But let's see what we can do with this access call. Access call. See what is happening there. That will be the last chart we're looking. Access call, you can see that the stock has this morning tested almost this 1 hour chart. You can see it's looking up, money flow is trending, and the stock has also is also trending up. MACD opening a sign that the stock is about to recover. That means for those that are looking at the stock to watch very carefully and position before the stock cross 30 naira. I see that stock going up. Yes, let's look at this 1 hour. Let's look at the day chart for the stock. For the chart, you can see on the day chart that even past almost 30, almost 29 today. It's about 28.90, 28.80 this morning. You can see, but we can see that it's still above the T line on the day chart. Money flow is reading almost 77 the stock. Low RSI is saying that the stock has even entered overbought video, but saying that still has about to go because this shows around 71 and still goes monthly is positive even when it was seeing histogram slowing down gradually. But for me, let's quickly look at the 4 hour chart for the stock for calling today. Is the last chart we're looking at. And 4 hour chart, although looking at 4 hour chart, the stock is still above the T line. You can see it here, but money flow is looking now to reach 55, 52, and RSI, which is also up 70, and they were saying this was trying to become bullish. Once you cross this signal line here, I say bullish market. On this note, I'll say thank you. See you on Wednesday, hopefully by God grace. Bye.